Hey everybody, welcome to Trading Futures with me, Anthony Crudele. I'm very excited about today's show. My good friend and great futures trader, Morad Askar, otherwise known as Futures Trader 71, will be joining us. We have a yoga instructor and one of my favorite Instagram influencers, Tova Sklar, here to tell us how yoga can change our lives. Last but not least, we have futures trader Dani Sittloh sharing with us stats from Wazzabull. Welcome to Trading Futures. Morad, what's up, my friend? Thank you for joining me. Thanks for having me. It's great to have you here. So Morad, the talk of the town are these Micro E-minis.
Yeah.
For those that don't know what the Micro E-minis are, tell us a little bit about them.
So the most popular products in the futures market are the ES, NQ, and so on. Those products have gotten really big. They have a big notional value. And what the exchange has done is put out another product that reduces the size of these contracts to 1/10 the size. And the goal here is to make futures more accessible to smaller accounts. They're also a great product to be able to practice with, to test your edge with live, right? So the four products that are being presented are the MES, which is a Micro ES, MNQ, which is Micro NQ, the M2K, which is the Micro Russell 2000, and the MYM, which is the Micro Mini Dow. And those are the three pieces that the four products that are being presented.
Now, you've been one of the strongest voices wanting these products for a long time,
Absolutely.
really since I've known you. Why do you think this is such a big deal for our industry?
So I started pushing for these back in 2012. And the reason I saw this as an issue is because I was watching people trading smaller and smaller account sizes and really constraining themselves. Now, the key problems that traders have with staying with futures come down to basically capitalization. You know, you're trading a product at a very, very high leverage and nothing good can come out of that. The second is trade management, right? If your account size is not big enough, you are having to trade one lots. The third problem is that I know people who've been on simulators for like 12 years, 10, 12 years, and that's not a good thing. So those are the three key reasons, and if we can get people to practice on something that's a little more manageable to get started, I think we can retain more people in the industry, we can attract more people in the industry, and I've seen that myself, and it's really, really important.
Let's start with capitalization.
So capitalization is one of the biggest problems traders have. Most people can only put $2,000, $3,000 in risk capital. I'm talking about online traders, not professional traders. And if we cut the size of the contract, the most popular contract in the world, to 1/10 its size, it's the equivalent of trading a $30,000 account, which is what I normally capitalize a prop trader with. So capitalization gives people the opportunity to actually take smaller losses. And the goal with the micros is not to become a billionaire. The goal of the micros is to figure out your edge live in the market, keep it in futures, get all the advantages of futures, and not have to put in so much money. I would suggest that even if you have a lot of money, set it aside, just put a small amount, get your edge figured out with the smallest risk possible, and then put more money in and come back and trade the minis to make real money.
This solves a question that you and I get a lot. How much should we start with in our account? And I've always said to people, look, at whatever the overnight margins are, I feel that a new trader should be trading that contract size intraday. You don't need intraday margins to start. You need to learn how to trade before you start using that leverage. And now they could just start with this. So yeah, great explanation. Let's talk about trade management.
So now that we have the full margin on a Micro ES, which is estimated to be about $700 per contract. And I'm with you on that. I think people should deposit the full initial margin required by the exchange, and that keeps you out of trouble, in my opinion. So at $700 per contract, you could trade up to 3 contracts for around $2,500, which is about what most online traders can put in terms of risk capital. 3 contracts allow you to now get out of binary trading, where you have to be accurate on your entry and your exit. Very difficult. between you and I'm a horrible one-lot trader, right? I need to be able to scale to fund my trade, to take some risk off, and relax enough to let the next contract run. This gives people 3 contracts, and now you can fund your trade with the first lot, go for your target that you would have taken off with your binary trade in the first, with one-lot trade in the first place, and it gives you the opportunity to catch that runner. Like, you know, you could catch a trend with that third contract, scratch it, or whatever. You have now some ways to actually skew your edge using trade management, which is huge. You can give me a 50-50 setup, right? A 50% winning setup. It really is contingent on how I manage the trade itself, how I position the trade, that I can make money off of a 50-50 edge. And so that's a big piece. On a one lot, a 50-50 edge results in a loss, because now you got to pay commissions and fees and on and on and on. With more trade management options through these micros, you should be in a much better position to actually sustainably trade as a career professional, which is what we focus on at Convergent.
I mean, how many times do I say this on Twitter, on my podcast? Execution's everything. You and I have talked about this. You and I could do a whole show on execution. This is a great way, a great product for new traders to come in and learn how to trade with more than just one contract. I've always said you're going to learn so much more about trading in yourself and how you execute your strategy by using at least 3 contracts.
Exactly.
Another great explanation, Morad. Last one we're going to talk about is live trading.
So live trading, one of the biggest things that I see is folks put some money into an account, they get their demo login, and they're sim trading. Sim trading is really important because it helps solve 2 problems. One, it helps you practice learning the platform that you're going to trade on with no cost. You can figure out all the buttons, make all the errors, and so on and so forth. That may take 2 weeks to a month. After that, a sim is very useful in taking your idea and testing it on an out-of-sample data set, a real-time data set. And so now you can practice that, get that edge, figure out that you can do it before you actually put live money out and trade it. You should not be on a simulator long-term. The micros allow you to go live, still at the lowest risk available, and really test out your edge and not have to sit there and simulate for a long, long time because you're too afraid to trade a bigger product like the minis.
Another great explanation, Morad. You ready to go over to the desk and go over one of your favorite technical strategies?
Absolutely.
Next up, everybody, Morad will share with us one of his favorite technical strategies. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
Welcome back, everybody. I'm still joined by Morad Askar. Morad, on the couch, I asked you to share with us one of your favorite trade setups. Walk us through it, please.
So this is the mid-continuation trade, and this consists of keeping track of the high and low of the developing session after the pit open, and we're looking at the center line of that session, and basically as the market breaks, so you don't trade this during the chop, as the market breaks, and we're looking to trade with the break if it's a short setup, and the market falls, we want to pull back to the mid to get short for a continuation trade. That's what this trade is.
Talk to us about the calculation, Morad.
So it's simple. We take the current high a day, current low a day, and just find the midpoint between them. And that's going to change as we make new highs or lows. That line is going to change over time. And we're just monitoring how the market comes back and reacts at that line.
I know we're going to look at some charts. Do you have an indicator developed for this, or are you just measuring?
No, I have on my charts, this is automatically being built. As soon as the pit opens or the cash opens, it draws a blue line for me and it tracks it, and I'm monitoring how the order flow is coming into that line to take the trade.
Talk to us a little bit more about the requirements.
So we don't want to do this in a choppy kind of open, okay? We want to do this in more of a, the market's balancing out, first 15, 20 minutes, and then we see a break, down or up. Once I see a break, I kind of shut off all bias to opposite of the break. So in an example, the market chops around and then it breaks to the downside. Now I'm only looking short, okay? And I'm monitoring when it pulls back, because I'm not going to sell the breakout. When it pulls back, I'm looking for how's it approaching this midline, and I'm starting to position myself or stalking it to execute at that price, as close to that price as possible. Nothing's perfect.
Yeah, no, nothing ever is, right? So when you say these requirements and you say that you have a specific time basically that you're looking to execute this, you're not going to do it during a choppy market. So are you pretty much looking at this during regular trading hours only?
Yes, I would not do this. I would not do this on an off market or during a period where the underlying is not trading. So if you're trading S&Ps, you want the cash market to be open, because those moves tend to not retrace all the way. You don't get V bottoms and so on. So this is really strictly 9:30 Eastern to 4:15 Eastern type of thing, just a pit session, and the active session is what I call it.
Great stuff as usual, Morad, but as you and I both know, execution is everything. So everybody, now that Morad has showed us how his trade sets up, next he will walk us through how he executes that trade. Stay tuned.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com. Why trade futures with TradeStation? You can trade over 80 products, from home, work, or on the go, with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at TradeStation.com.
Welcome back, everybody. I'm still joined by Morad, and as we said in the last segment, execution is everything. So Morad, let's talk about execution.
So the example here is actually from April 24th. The ES opens in this choppy open auction, and then it breaks lower, right? It drops from 37 to 31, 6 points. And so our goal now is to only focus on the short side, and we're stocking a mid-trade for a pullback to get short in the direction of the market. We want to trade with the trend, the classic, the trend is your friend. This is what it's set up for. So I'm setting up for trading anywhere near the mid, around 34 in this example, targeting 31 initially, stop at 37.5, and then if it continues to run, then I'm looking for 27 and 25 to get out of the trade.
Let's go to the charts, Morad.
So here it is. We open right here. This is the open, and you can see the market's not going anywhere. So we've put in an opening range, tight opening range, and I'm looking for this bar here. I'm looking for the break, something that's unusual, right? A second standard deviation move, and then it starts to high, low. The mid ends up being right here at 34, and so the market starts to walk up to the mid, and now I'm paying very careful attention to how it treats this mid area. And I'm looking to short it, take out the low, that'll be the first target, and then look for what's happening next.
Let's go to the next chart.
So here we see it breaches the mid. We look to sell it. Now we're short. Now we're waiting for this thing to kind of fail over and turn back down to 31.
And your stop is above the high.
The high, yes.
Just one tick above?
Yes, it's one. I usually go wider because I don't want to be a one ticker, but 3 ticks or so. I generally look at the stop as a 3.5 point S&P stop, and that puts us from 34, puts us at 37.5, just above the high.
And you work a hard stop?
Yes.
Okay.
So here's a trade that didn't work, right? So we've talked a lot about showing folks how a trade sets up, and I didn't want it to be a perfect example because there's no such thing as perfection in the market. So this is a trade that pulled back to the mid right here, 34, and then gave us an opportunity, but it continued higher and hit our stop. boom, we're out. So this is a trade that didn't work, but the day actually gave us 2 more opportunities at the mid.
Oh, so this trade continues throughout the day.
I continue to stock the next one, yes.
All right, let's look at the next one.
So the next one is we break higher, and then we finally get this run. So now the high of day is way up here, and the low is at that 31 that we were targeting in the first place. 29.35 is the mid. So now I'm paying attention to see how the market treats this mid area as it pulls back. And then we'll see how that works out. So we enter around 29.35, targeting the high of day, which was 29.39.50 or so, with a stop at 29.32 or below.
Yeah, because so now let's go to the next chart. The stop moves below the low.
Yeah, or below the low, absolutely. So we want to keep that stop pretty wide. I don't necessarily, sometimes it sets up so far that the low becomes 10, 12 points, and it's too wide. I got to keep my risk a little bit lower. But in this situation, it pulls right back to the mid. We get our fill at 35, and now we're targeting, the target is the high of day. There's the fill at 35, hits the target, the first target, and guess what, Anthony? We get our scale out, which funds the trade. We get our second target, but then it turns around and goes right back to the entry. And so we stop out as close to the entry as we can. When we see it starting to fail, we're out. So this is an example. It just happens to play this way. The first example is a stop out. The second example gave us 2 targets and it stopped. And then the third example is actually the perfect situation here. So here's our stop out right in here. The market pulls back, and we're selling the mid again from below. So we've crossed it. We're selling the mid from below, looking for the market to extend below the low it made earlier in the session. Same setup, same rules, same everything. And we'll see how this one works out.
So just to be clear, you went from short to long, and now we're back short.
Short, right.
Okay.
So here we sold it right above 29.35 and a half, and we're targeting the last low. So the last low from earlier, the first trade was 31. That was our initial target. That continues to be our initial target because we expect that, hey, if the market finds buyers here again, it may stop here, and we want to take something off the table. You need 3 contracts to be able to trade this, right? Minimum. This is where the micros come into play. So we get our fill at 29.31.
Let's go to the next slide.
And then it fills us on our final targets, and the end result is, hey, we got stopped on the first one, but that doesn't end our day. Our stop is reasonable. It doesn't knock us out of the game. We can continue to play, right? The second one, it just so happened to give us 2 scale outs, and it scratches out. And then the last one actually pays for the stop out plus some for the day.
2 quick questions. First, is this trade something that you are doing consistently throughout the day? So if the first one doesn't work, you just continue to trade it all day. What if it doesn't work the second time or the third time? Is there a point where you just say, that's it, I'm done?
Yeah, one of the risk rules I have is 3 strikes, you're out. This is a risk rule that I've had for my prop traders and everybody else. If you're firing on a setup and you try it 3 times because it's set up, and you have to take the setup when it shows up, you can't just pick and choose, because then you introduce randomness. If it doesn't work the 3rd time, that setup is pulled off your playbook, and then you need to look at something else if you still have credit for the day. But the most important thing to remember about this is we don't sit there and plot a midline and just sell and buy at that area. What we want is a market that consolidates, and we're only selling the mid of a break. There has to be a break. In other words, an expansion of range from consolidation like we saw at the very beginning. Okay.
Last thing, it reminds me a lot of a 50% fib, but you're doing it as the market's moving and changing. You're only using that mid, that 50%.
That's where it came from. It's a 50% pullback, and if you run some stats, you'll find that the 50% area in general for the day tends to get a reaction, much like you probably have seen many times around the day's VWAP. There's a small reaction there. And I'm a day trader, so I'm looking for 3 points on my first, looking for a target on the second, and I'm trying to catch a runner and manage that runner for the rest of the day.
Great stuff as usual, Morad. Thank you very much for sharing that with us. All right, everybody, next up, futures trader Dani Sittloh will tell us what's on her radar using Wazzabull and Red Sky Alerts. Stay tuned.
This is my headquarters. This is where I trade. And manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. Morad's still here, and we're now joined by Dani Sittloh. Dani, what's on your radar?
Hi, Anth. All right, so what I did was I went to Wazzabull and I pulled up Red Sky Research alerts, and you and I both know we use Red Sky Research to confirm our trades, right? So the first one in relation to Morad's, what he was talking about in his trading system, I pulled up in relation to it the E-mini Nasdaq and the Dow. So let's just first talk about the Nasdaq. This one says that the Nasdaq 100 trades more than one standard deviation above the 5-day moving average. So similar to Bollinger Bands, right? This alert says that 68% of the time over a 5-day outlook, the market is going to be a bullish indicator. Right. So including that, over these next 5 days in this bullish move, it will target 79.73 quarter. So pretty interesting, right? So
yeah, I mean, over 5 days, what you're saying is that we have a possibility, a 68% probability that 79.73 quarter will trade.
yes.
How is that 79.73 quarter number derived?
So it's an average of the market's past behavior over a 5-day outlook of trading more than one standard deviation.
That's pretty cool.
Yeah, I think so too, and super helpful.
Yeah, and Morad, you and I were actually looking at an E-mini Nasdaq alert the other day when you and I were in your office. Do you look at the E-mini Nasdaq or the E-mini Dow when you're in S&P trades and look for confirmations like this?
Always looking for what the rest of the market is doing, and this sort of thing just helps. If you're in a trade, it helps you stay in the trade, hang in there, and if you're not, then it helps you to look at which side you should be going for.
Yeah, I mean, because the other day when you and I, we were looking at an alert, and of course it was a bullish alert, right? And it came up in the Nasdaq, and you and I were like, hey, this move is underway. During the day, we may start to look for more bullish setups because we're looking for a confirmation like this that supports it. Dani, show us what you've got in the Dow.
All right, so the next one up is in the Dow. Scrolling through, right? And similar to the Nasdaq alert, the E-mini Dow trades more than one standard deviation but below the 5-day moving average. Okay, so and also the outlook is a little bit different here. It posts for a 4-hour outlook. This indicator is 56% likely to be a bearish move. All right, so then you know what your support target number you're looking for, the 26,388.75. And what's interesting about this alert and all the alerts on Red Sky Research is that you do get an update report. Once it's gone through the hour outlook or the day outlook, it pegs that it hit its target.
Yeah, that's one thing I really like about Wazzabull and Red Sky is that it gives me alerts throughout the day. So if something's happening, it sends me, it says, hey, we are one standard deviation or we are 1% up or down in some of these markets, and it keeps us in the now. Morad, I want to stay on this alert just for a moment. 4-hour outlook. And you got a 56% chance. If you saw something like this intraday, would this be a good confirmation for what you looked at earlier today with your mid-trade?
Yeah, so for me, because I'm a day trader, for me, it says stay off the long side. That's what this says first and foremost. And to start leaning on my setups, because I'm not going to look at what this is saying in terms of, oh, there's a line across there, so let me sell that line. I'm going to look at my setups and find a short setup because the probabilities are on that side.
Yeah, absolutely, everybody. If you want to get on these alerts like Morad, Dani, and myself, go to anthonycrudele.com. But we've got one more segment. Next up, I will be speaking with one of my favorite follows on Instagram, Tova Sklar. She will tell us how yoga can change our lives. Stay tuned.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at tradestation.com.
Welcome back, everybody. I'm joined by Morad Askar and Tova Sklar. One of the reasons I created this segment of the show was to get traders to not only invest time on the technicals and the fundamentals, but to invest time in themselves. Tova has been a great influencer on getting me more involved in yoga and investing time in myself. Tova, Talk to us about how yoga could be an investment in ourselves.
Thank you so much, Anthony. I know a lot of times we think that we really don't have time to either go to the gym or work out at all. But what I have discovered throughout the years, not only for myself, but for students that I teach, is that taking even small amounts of time throughout the day is an investment in yourself, not just physically, but also in your mind. For example, taking 5 minutes just to work on breath is basically like a master reset. And when you come back from either working out, taking yoga, or even just a couple minutes to work on breath, you're thinking more clearly and your actions are more powerful and focused. So on the surface level, let's say we're at our desks all day and the same muscles are always getting worked, are getting tight, your shoulders, your neck, your back, your wrists a lot of times. So taking a 5 to 10 minute break is gonna physically be super beneficial for you, but also on a much deeper level, taking time away from your work, taking time to stretch your body, to focus your mind. When you come back to your work, you are coming back much better, much more focused, and I see overall a strength in the ability to let go, the ability to release, and the ability to let go of the control ultimately makes you much more powerful, much more focused, and much more clear in your decision making.
I can tell you from personal experience, I don't know about you, Morad, but after I take a 5-minute break and just take a breath, amazing when I come back to my screens how much better I feel. And you know, Tova, not all of us can be as good as yoga as you are, and yoga can be intimidating. Yeah. I know that I don't always go to those classes, so I actually started doing a little bit of yoga at home using your app and things like that. Give us some pointers for everybody out there that's maybe new to joining the yoga, maybe intimidated by the classes, on what some first steps they can take to start doing yoga.
I love that. Okay, so at the very basic level, you take a couple breaths. So stop what you're doing, put your phone down, unless you're doing my app, of course, and then I'm assuming you're at your desk. So you want to do the opposite of what you've been doing all day. If you're rounded forward and your hands are flexed, you want to stand up tall. Let's say, for example, you want to interlace your hands behind your back, stretch your knuckles down your back, lift your chest up to the sky, drop your head back a little bit, and then just take a big breath in and a big breath out. Big breath in, feel your collarbones open and stretch. And a big breath out. Now release your hands, stand up tall, and from those 2 breaths, I don't know about you, but I feel I can breathe easier, I feel a little bit lighter. It's super beneficial just to take these little micro breaks throughout the day, because I know we can't always make an hour workout, we can't always go to a yoga class, or it's intimidating, like you said. So there are so many ways that you can bring this into your life without overcommitting.
Yeah, I love that. I know that I felt a little bit more relaxed after that, Morad. Now, Tova, you mentioned your app.
Yes.
I love the app because it gives us those little breaks to go and check it out on the phone and say, okay, here's a time where I can invest in myself, like we talked about. Talk to us more about your app.
Thank you so much. So I developed this app where I have a lot of different classes. I have some tutorials if someone's interested in specific poses, let's say. I have shorter classes, and I just released a brand new program, a desk stretch series, which I think is perfect for you and your audience. They're a series of 5 to 10 minute workouts. The first one is just breath. You sit at your desk, you can do it any time in the day. You just do 5 minutes of breath, and it's like a master reset for your mind and for your body. I also have commonly tight areas. I have neck and shoulders, I have low back, I have hands and wrists if anybody has or just wants to avoid any carpal tunnel issues, and I have legs. And just doing these throughout the day, maybe you can do 1, maybe you can do 2, maybe you can take it on a few times a week. I'll be introducing new classes all the time. We work on ones for headaches and neck pain, things like that, and it really is a game changer, whether that's all you could do or whether that spurs you on to doing more. Just from starting that, I just love bringing that into people's lives, especially where you guys, I know it's like super high stress, super fast paced, and sometimes 5 to 10 minutes is all you need to set your day up the right way.
Yeah, we were talking about this earlier actually, and I talked about how in my life I learned that work hard, play hard didn't work for me. You really need to work hard and play easy. Do the opposite. Tova, this was awesome. Where could people, I know, like I mentioned, I follow you on Instagram. Where could people follow you on Instagram?
Okay, my Instagram handle is at @tdiddy2, like P. Diddy, T. Diddy. Number 2, you get to see fun, crazy stuff, yoga, workouts. My dog, of course, he's usually the star of the show.
Those are my favorite posts.
And then also my app you can download. We'll have the link hopefully attached. It's on iTunes or Android, the Play Store. and it's through Playbook. So we'll have that link. If you go through there, you get a free 7-day trial, and then you can do a monthly membership or an annual membership. And I'm always there for feedback, questions, and even requests. If there's anybody that has specific class that they want or specific area they want focused on, I'm there. It's feedback based, so that class will be made.
Yeah, everybody definitely check it out. Invest
you.
time in yourselves.
Thank you
Tova,
so
thank
much.
you. Morad, as usual, thank you, my friend. Hey, everybody, thanks for tuning in today. You can catch all of the episodes on anthonycrudele.com, and you can follow me on Twitter and Instagram. See you next time. Throw the cards. Don't be intimidated, Tova. That's what we did on the